Now, in its latest oil market report for July, producer club OPEC placed Nigeria's oil output at 1.3 million barrels per day, meanwhile the International Energy Agency has lowered its oil demand forecast for the year by 8.1 million barrels per day. And Femi Oladehin, a partner at Argentil Partners, joins me from Lagos to discuss the stories and more. Thank you so much for your time on the show today, Femi. And I'd first like to get your thoughts on the Nigerians' compliance to OPEC's output curbs.
Hi, Ken. Yes, Nigeria has been doing everything to be compliant, given its own economic constraints. I think that these are very interesting times, actually difficult times for most oil producers. And in the last few days, we're starting to see even significant issues with Nigeria losing some of its European markets. The reality at the end of the day is that the challenges that we're facing now are inevitable in terms of OPEC trying to ensure that prices remain at the current $45 to $50 band that they've been trying to achieve since the previous crisis between Russia and Saudi Arabia. I expect that these cuts will be short-term in nature, though. The general expectation is that by the next OPEC meeting, there would be pressure especially from economies that are right now in the middle of a recession. There will be pressure from them to ensure that we start to see a recovery in production so they can claw back some of the losses. Most of those countries are dealing with significant budget shortfalls at the moment, and this new levels of production will not help.
Yeah, talking about budget shortfalls, though, there's still quite a lot. It's a uphill task to fix Nigeria's revenue challenges, and I do think we're being creative enough in that space.
So, Ken, sorry, I didn't catch the last part of your question. But if your question is that are we being creative enough? Look, I think that there's very limited scope.
Yes.
For the Nigerian government, given the current structure of the economy, there's limited scope for them to be able to make the sort of big wins that we're expecting. The reality is that from a tax-based point of view, a lot of the big taxpayers are currently going through significant downturns. I mean, the oil and gas sector is dealing with significant losses. They would have been one of the biggest taxpayers in the market. Apart from the banking sector that's seen some level of improvement, and of course with interventions from CBN, the tax base itself is already constrained. So the truth is that from a revenue perspective, it's unlikely that Nigeria has a magic wand that it can swing at this time. Unfortunately, I think that the last recession gave us an opportunity to create an economic bedrock in anticipation of any other downturns. But the ERGP, which was, the ERGP that was celebrated when it was launched, didn't seem to have been implemented properly. So we're where we are today.
All right, but Femi, what do you make of the renewed focus on gas, especially with the gas transportation network code coming live?
We've always been big on gas. We've always felt that Nigeria's lack of development of the local gas market has been a problem, and it's actually quite sad. President Obasanjo, during his time, started the gas master plan. And President Jonathan and Yar'Adua as well tried to go ahead with it, but it hasn't really gone anywhere. The reality is that gas is a viable alternative, even for domestic markets, as well as international markets, as you've seen the big noise around the LNG Train 8, So the truth for me is that we can benefit significantly from the upsides that come from the gas play. This transport framework that has been developed by the DPR is a good one. It means that there is a structured framework for the transportation of gas, and ensures that we can do that efficiently and safely. Ken, this is my concern, and this is what I've been saying about the Nigerian gas market or Nigerian oil and gas market as a whole. The fact that we're still relying strongly on government either to play a regulatory role or to play almost like a catalyst for investment and growth is still a problem. Markets that have been able to develop aggressively focus on private sector-led initiatives. The fact that we're still relying on DPR, for example, to champion a transport framework in itself is faulty. They don't have a great track record of delivering on anything. Why would we trust them with this one?